somewhat to, you know, for people
Oh
who
yeah,
might not
I
know.
ain't just gonna like dive in or nothing like that.
No, no, you're good. Just so that they know, because
Oh,
I mean, I explained it to the first couple of people from Exchange that hopped on. So
oh, word. That's what's up. That's what's up. Well, shoot. Let's go ahead and get started. Let's see here. So I'm gonna share this whiteboard real quick, and then while you guys are, following those steps, I'll just give a little synopsis of myself, pretty much. Um, my name is Corey. I go by Wallace. And, a lot of people know me as Wallace Ferragamo on social media. That's just like a brand for me. Um, been trading actually for approaching almost 7 years now, which is crazy. Off and on, right? So started back in 2013 with binary options, and then ended up, I guess, jumping over to the Forex realm of it, which is the mother of, I feel like it's the mother of all trading just because of how huge it is. And it's a lot that you can tell as far as like the world when you trade Forex, because that's what it's dealing with is like world economies, not necessarily a centralized stock. So, and we'll get deeper in that real quick. Um, Started War 3 Associates with Brian and Caesar. They helped me grow it a little bit, tremendously. I appreciate these fellas back in, 2014. We had it
Yeah.
booming for a little bit, man. Bro, we had it booming for a little bit. And then, some shit just went down and it crumbled a little bit. So, I actually had, to be honest, I went through a huge depression. You know what I'm saying? I battled depression for a little bit after that because I lost a shit ton of money. All kind of stuff, bro, happened with that. So I lost a shit ton of money. So guys, like the risk is real. You know what I'm saying? So you have to understand that and understand your appetite for it. And then you honestly have to have a mindset for this before you honestly become consistent or successful at this. Just because most people can't fathom the amount of money that you can honestly make from just clicking a button and sitting at home in your bed or on a beach somewhere, right? But what has happened is people have realized now with the pandemic and working from home that there's a lot of shit that's able to be done from the power of the internet. And this is actually one of the big ones. Forex is, to the retail trader, I would say it's relatively new. I would say within the last, what's just 2020? I would say within the last 30, 40 years, it's become more prevalent to the average person due to the internet. So
I think 98 is when it went
right.
public, I think 98.
Yep.
For the retail, for the like through brokers and stuff.
Exactly. So this isn't anything that we're teaching you is nothing new, I'm gonna say. So don't think like this is just some trick of a show or something like that. But no, this is something that's always been around, guys. So I mean, and what I'm trying to, or what I'm going to teach you guys is a skill set that you all will be able to take with you wherever the hell you want to, pretty much, and just trade and live a life. Fund your other business projects and so forth. But so I do have a little experience in this industry. I've taken several courses, invested a lot of my time and willpower actually into this shit, just trying to learn it. Because I haven't had a full mentor, I would say. So a lot of the stuff that I'm teaching you is pretty much self-taught from, like I said, the courses I've taken, books I've read, and things of the sort. So I've polished myself basically over the years. And so with my guidance, I'm hoping to basically curve your guys' learning curve and make you guys millionaires, honestly. But like I said, it takes a certain type of mentality. And that's why I'm really going to pound into you guys is you have to have a mentality for this, guys, because again, you can see it. It may seem like one moment you have it, but then you'll have a losing streak, right? And the losing streak, depending on what type of trader you are, what is actually going on in your head and with your body language itself. Like, are you going through something with your spouse? Like that shit is going to affect you guys when you trade. So there's a lot of emotions that we're gonna cover deep inside the class. That's gonna help you deal with a lot of things. So I teach the way I teach now is very different from when I first started teaching. My first strategy was called the Luciano theory. It consisted of a few moving averages and was based off a market maker's method. And it was simple for the most part. It had people eating and shit like that. But I think that what I'm using now is more refined, and it gives you a deeper insight to the market than Luciano. So, not only that, it's based on pure price action and Fibonacci's. Okay, so what that means is once you learn this, or once you even just learn this, the basics of what I teach you, like, create your own system around it if you need to, like, because I don't care what strategy you go to, it's going to have some portion of what I'm teaching you. Because after I teach it to you, there's a couple of not moving averages, a couple of indicators that you honestly don't even have to use, and you'll be able to trade naked. And they always say that, naked trading is the best form of trading because you're going off the pure price action of the candles. So that's what we're going to get deeper into. The way I'm going to do this course, once I do start it though, it's going to be a set number of seats. The reason why I'm doing that is because I don't want people to just, coming and going and not really getting the full gist of what's going on. Because if you do that, you're harming yourself. If you come in the middle of it, you're going to harm yourself because now you don't know what, you don't know what you don't know to be able to catch up. Because I'm not going to release any recordings until like the site and all that stuff is, pretty much up and bumping and shit like that. But it's I would say the whole course now, back in 2017, 2018, it was like a 10-day little course. I think now it'll probably still be around a 10-day course, but I'm going to add a few more days after the finish, so that way we can just, focus on your guys' trading, your guys' markup, your guys' questions. So there will be times where I'll ask people, hey, mark this chart up. Let's see what you're doing, and I'll ask for volunteers. And if you want to look at something, I want to see, and I want to see basically what it is you're doing, so that way I can try to critique you. And honestly, guys, the system that I'm teaching you guys, it's a pretty accurate system. Like, I'm not gonna even go front. And then once you pair it with the risk management that I teach you guys as well, like, all you have to be, bro, like, you can be a 50-50 trader and still be net profitable. So don't think you guys have to win every trade. The system, honestly, is probably going to net you, if you fully learn it, and depending on how you trade, it could be a very highly successful trade system, honestly. Like, it's netted me some masses and things of the sort. I flipped some accounts myself. So, but that's just a little bit of background about myself, what I got planned for us and things of the sort. But let me pull this file up real quick. Like I said, guys, if you guys are experienced and already know like the basics of the market, what's a pip, what's a candle, just chill back for me for like the first 30 minutes. Let's see. Any questions yet? You guys can unmute yourself and ask a question if you need to.
Yeah.
Cool. Let me see.
Soon though, don't worry. I got a bunch of questions.
Oh, no doubt. Write them down. Write them down. Let me see if this is it. So I'm actually going to I'm actually going to use a old slide for like the first 30 minutes so I can try to teach people what it is the market is actually. So let me just pull it up.
I'm gonna put it on the computer.
Where did I put this thing? Man, is this thing not gonna open for real? That ain't it. Boom, here we go. All right. All right, yeah, so let me show you guys this real quick. Hopefully you guys have followed the steps so far or already had the steps done. If not, I'll walk you guys through them. But let's get started. All right. So you guys see this right here? This little PDF?
Yeah.
Yeah, we see it.
Cool.
Yes, sir.
All right. So I'm going to kind of like, I'm not going to like speed through this, but I'm going to touch on it. The reason why I said I'm kind of going to speed through this is because I posted a guide already in the in my Discord that is actually it's like a whole document of baby pips, basically. You know what I'm saying? It's like a cheat sheet to baby pips. So if you guys could have read that, you would be able to follow along with this real quick. But so my strategy, guys, or my theory, whatever you want to call it, it's not I guess it's not the golden grail. I mean, like I said, it's not necessarily the holy grail, I say. But it is a nice system to use, and it can be a simple system. It's derived of a few different concepts. Like I said, it's got a little bit of inner circle trader, a little bit of history. Scott definitely has a lot of Elliott Wave theory in it. It's got another portion of it has to do with harmonics.
Yeah, that's me, baby.
What's going on, my man? And then some of the structure is going to come from the quarters theory. But basically what I'm teaching you guys all comes from books. And like that, they're actually free books. I've actually got the PDF of a lot of these books that I'll actually post a link to and stuff like that too. So don't worry about nothing like this. This is kind of how the course is set up still. You know, we'll go over trade styles and analysis, a different type of multi-chart analysis, touch on Elliott Wave, you know, trend lines, Fibonacci retracement, not necessarily Luciano moving averages anymore. I use one moving average. We'll definitely touch on candlestick formations and technical charting patterns. Those are huge. Risk management and journaling are another thing as well. So let's go ahead and get started. All right. So this is what I teach you guys is 100% technical analysis strategy, basically, right? There's two type of Forex analysis. You got your fundamentals, which has to deal with like news releases, news reports, and things of the sort like that. Then you've got the technical side, which is pure price action. All right. I would say that trading, guys, again, is 25% skill, 75% psychological. And when I mean psychological, I mean controlling your emotions. And if you're new, you guys will encounter some emotions on a different level, basically, because you're dealing with money. Nobody likes to lose. You're going to deal with all of them. Like I got a whole graph. So when you're new and you're just getting into the market, a lot of people say trading's gambling, but gambling essentially is betting against something where you don't really know the odds necessarily. Where you know the odds, but they're just kind of like stacked against you. Trading, don't get me wrong, trading's kind of stacked against you, but it's not necessarily gambling. If you can actually learn the skill set, and this is why you have the whole Forex industry, because not only do you trade currencies, you trade commodities, precious metals, indices. To give you a hint, the S&P 500, the NASDAQ, and the Dow, we all know those industries or those indices close at a certain percentile or a certain number every day. That number that they close at is the number that we trade, versus a stock market or a stockbroker or a stock person trades those individual companies inside those indices. If that gives you a comparison to the different sizes of the industry, you're talking about an industry that generates about 230 to 200, I would say 75, billion dollars in a day, in comparison to, I think it's up to around 5 to 7 trillion now in a single day, guys. So understand that 6 to 7 trillion dollars are moved around the whole globe in a single day. You don't even need that much money, right? You just have to capture what? Comfortably a couple hundred a day. And then you just build from that, right? So like I said, it's a whole blueprint, guys, that what I'm going to teach you guys. And if you just stick to the blueprint and, you know, just quirk it here and there, but just try not to stray too far off course from it, you'll be straight. All right. Give yourself some time in learning this, guys. All right. It took me a little bit to learn it. I'm still a student to the game. If that gives you any idea, I'm always a student to the game. If somebody says they got something hot, yo, I'm like, what's up? What you got? You know what I'm saying? Put me on game. Let me know what you know. And I wish I had more people like me in when I first started, because like I said, like, I'm not going to put you up on no bullshit. I'm not going to upcharge you guys. I'm giving you guys the sauce. People charge $1,500 and shit for what I'm teaching you guys, basically. Be patient, guys, with this, okay? Give yourself, I would say, 90 days. Give yourself 90 days. If you can dedicate an hour a day to this, shit, you can probably cut that 90 days in half. But give yourself 90 days. Understand what I see in the charts can differ from what others see in the charts. What you see in the charts can differ from what somebody else may see in the charts. All right. So this is an individual sport. It's your psychology versus the market. This isn't something that you guys join. This is a skill set that you all learn. So understand that as well. So this isn't a company or anything like that. This line right here is a key. You must train your eyes to see things in present form. All right. And that's easy to do in retrospect. And what I mean by easy to do in retrospect is once I start showing you these charts, I can show you guys all day, you know, here, trade setup, trade up, trade setup, trade setup, trade setup. But you have to train your eyes to look for the signals for those setups in present. And that's what this line means. So that's what we're going to get to as we, you know, take this journey together. Let's see. So what is Forex? All right. Forex is the currency exchange markets traded 24 hours a day, 5.5 days a week. Sunday, 5 p.m. it opens to Friday, 5 p.m. EST it closes. You can trade all fucking day, guys. The crypto industry, you can trade all fucking week, all year, basically, unless it's a holiday. But I don't really trade crypto on the weekends. Major corporations, your central banks, your hedge funds, your banks, retail traders, that's who trades in this industry, basically. The major corporations, definitely the central banks, are who controls this or manipulates a lot of this stuff. And that's when you see like JP Morgan and all these other people get hit with these fines for market manipulation, right? Then you've got the smaller guys like the hedge funds, private hedge funds. And then you have the banks, and then you got us as retail traders. So what we do is we piggyback off the moves of these previous people by reading the price action of the market. Online brokers, like Brian said, back in '98, those brokers is what enabled us to speculate in this market. So that's why I try to tell people like, yo, you know, Forex has been around forever, but to us as the small retail traders, it's still relatively new, right? You're talking about what, 22 years old, guys. Like there's a lot of growth outside of just trading itself. Like you'll see as far as like algorithms, different trade software will pop up. Like it's a lot of growth to this industry still. Before the internet, retail traders was limited to wealthy businessmen and women who had the liquidity to basically go trade, right? It used to generate 3 to 5 trillion. Like I said, now it's up to 5 to 7. Stock market generates in between 250 and 280 now. There's a thing called trade sessions and time zones. You've got the Sydney session, which is the Australian session, right? That opens at 6 p.m. and that closes at 3 a.m. And this is Eastern Standard Time, right? Then you've got the Tokyo session. A lot of Asian pairs, Japanese, JPY, things like that, are predominant in this pair. I mean, in this trade session, 7 p.m. to 4 a.m. Some of these sessions do overlap. And those are typically when there's a new session opening and when there's a session closing. So Sydney will overlap with Tokyo when Tokyo is about to open. London will overlap with Tokyo close when London's about to open, and so forth, right? So what I teach you guys is, since the way this strategy is set up is I'm on the charts, I look for my setups in between 11 and I would say 12, 12:30 at night, right? Once I do that and I enter my orders, I go to sleep. I'm not up watching charts. I'm not doing none of that, guys. I go to sleep. Set my stop loss, set my take profit. I go to sleep. And I'm gonna teach you guys to do the same. Because what that has allowed me to do, honestly, is take all the emotions out of it. You know, go to sleep. Don't watch the charts. Let it play out. Okay. Let's see. Understand, guys, what we are speculating on is a real fraction of a penny. Okay. It's got a lot of, I should update this. I'm not going to say it's the least volatile market, as price changes usually less than 1 cent per day, which is true, but at times it is a very volatile market and price can move more than 1 cent a day. Use of higher leverage is used to increase the value of potential movements, and that's why I recommended 2 different brokers. The first broker was a offshore broker, which some people like to frown upon it, some people don't. The reason why I use an offshore broker is because it allows you to, let's say, start with $500 and use that extra leverage to trade like you have, let's say, like $1,500 in your account. All right. And then I put Owando on the screen because that's the other broker I like to use. They're based out of Canada and they are actually CTFC regulated, which nowadays, honestly, even though it's regulated, sometimes you can still take a hit. For instance, there was a big broker back when I first started. What the hell was they? We were using them, Brian. FXCM, I believe.
FXCM, yeah.
Yeah.
They're not allowed in the United States no more.
Exactly, right? So like I said, so even though it's regulated, you know, you could still potentially, you know, kind of take a hit, depend on what kind of shit's going on with that broker. So just sometimes the regulation is helpful, honestly, but at other times it hurts you. Like for instance, that regulation also is what limits the leverage to a max of 100 to 1 for a United States customer, which is really shitty. That means you have to have more capital basically to be able to do some of the things versus using KOT Forex with the higher leverage, least capital. So orders can be opened and closed in the same day for profit or left open for weeks or months. Depending on what type of trade setup you see and what type of structure, that's going to determine what type of trade you guys are going to be entering. The system I use is broke down that specifically, like, so there's no guessing to what type of trade you're gonna take. Like if you see the setup on a certain chart, that's what type of trade you're entering. Now, if you're entering a swing trade, you're more than welcome to scalp it, but just understand you're in a swing trade, so it's going to go up for a little while. Currency prices are based on objective supply and demand and is manipulated by an entity what is deemed the market makers. Market makers are your centralized banks, your huge hedge funds, and things of the sort. That's why they get hit with all those penalties. All right, so what I'm going to cover now is a few different terms that the new guys will need to understand and go over some basics. Like a pip, leverage, margin, what's a lot, what defines a trend, consolidation, MetaTrader 4 basic functions. I'm actually going to use TradingView. That's the software I use because I have a Mac computer, and trying to get MetaTrader 4 on a Mac computer is a horrendous process, let me tell you. What's a bid ask, how to read currency quotes, the spread, and things of the sort. All right, so any questions before I continue? Any new people have any questions before I continue?
Nope, you're good. I'm good.
Cool, bet. All right, so bid ask. When you guys are trading a currency pair, there's a bid price, which is the selling price, right? So picture it as like an auction. If you're taking something to the auction to be sold, you have a minimum bid, right? Or a minimum amount that you want it to be sold at. And then the buyer is going to raise his card, raise his hand, and ask to buy that at a certain price that's yelled out. That's what a bid and ask price is, right? Both are in relation to the base currency of a currency pair. Okay, a currency pair is like this right here, Euro USD. Okay, so when buying a currency pair or going long, as I'll say in the future webinars, the ask price refers to amount of the quoted currency that has to be paid in order to buy 1 unit of the base currency, or how much the market will sell 1 unit of the base currency for in relation to the quoted currency. Okay, the bid price is used when selling a currency price or going short. It reflects how much the quoted currency will be obtained when selling 1 unit of the base currency, or how much the market is going to pay for the quoted currency in relation to the base currency. The ask price is always higher than the bid, and the difference between the two is what is called the spread. All right, and that's what this diagram down here is going to tell you. So let's say the Euro United States dollar. This is the Euro, like in Europe, versus the United States dollar. The chart you're going to be looking at is showing you the value of the Euro. Okay, so for instance, this says this is your bid or your sell price right here. This is your ask price right here. The difference between these two numbers that are bold, I mean not bold, after the price right here is 0.8. That's your spread. The spread is how some brokers make their money. So anytime you see a spread, you'll see a spread of, 0.8 pips, or you'll see a spread of 300 pips on some indices. You'll see a spread of 50 pips on some exotic currencies. And that's how you read that pretty much. So you'll be selling at this quote, or somebody will be buying at this quote. An example is using United States dollar and the Canadian dollar. So this spread right here says for one United States dollar, you'll get $1.20 in the Canada dollar if you was to exchange it, basically. So you bid 120, ask is 120.05. This is $1.20. This is $1.20. All these right here are pips, and I'm gonna get deeper into that as well. So if you want to buy this currency pair, this means that you intend to buy the base currency and are therefore looking at the ask price to see how much in Canadian dollars the market would charge for US dollars. According to the ask price, you can buy $1 US with $1.20 and some odd change, right? That's what the pip says. Let's see. With that, we already did this. The difference between the bid and ask is called the spread. Remember the bid and ask, the difference between this and that, it's called the spread. That one had a 5 pip spread. Okay, and that's what we're speculating on, guys. We're not speculating on these dollars over here. We're speculating on the change of these numbers back here. All right, and due to leverage, even the smallest point change can result in thousands of dollars being made or lost. Okay, and this is why speculators are so attracted to Forex, is because of the market. Even the tiniest price movement can result in huge profit, and that's the case on some of these indices. So now you're probably like, what's a pip, right? A pip is the smallest increment of price movement a currency can make. Most currency pairs are valued and quoted against each other using 5 digits, depending on your broker. The pip count is where the money is made, and that's the underlying basis for making profits in the market. So let's say the Euro USD price went from $1.37 to $1.3655. In order to figure out the pip decrease, it's basically simple math. And guys, this is not something that you guys manually have to do. I'm just breaking it down for you guys, that way you can understand it. So you would just take the $1.37, subtract it from 136.55, you get 45 pips. What we're not taking into consideration right here, guys, is the spread. All right, so keep that in mind. So you get 45 pips. Now, how do these 45 pips translate into money for you guys, right? So if you executed $10 per pip, which is a 1.00 lot size, and for lack of better terms, I'm going to say $1, okay? So one lot size is equal to $10 per pip. So at the price of 137, it went up to a value of 55 pips to 137.55. If you was to buy at 137 and price rose to 137.55, your profit at $10 per pip, you just multiply. It's 550 bucks. Now again, what's not taken into consideration is the spread. All right. So the spread may cost you, you know, a few bucks, if that, right? Depending on the currency and tool you're trading. So a one pip would be 0.001. All right. So to the thousandths, the 10,000ths. I'm sorry. With the Japanese yen, one pip would be 0.01. So some of these currencies, like I said, like they'll pay you differently, and they're quoted just a little differently. But most are quoted with at least 4 or 5. This is the average daily range that most pairs move within a day, or within the session, okay? So for the Euro USD, it moves on average about 75 to 80 pips in Tokyo Asian session, 114 in the London session, and about 100 or 90 in the New York session. What I want you guys to pay attention to is this London right here. London session London is what we mainly trade, but again, guys, this strategy works on any time frame, any type of day, you name it. All right. So trade it on your schedule, but I'm teaching you guys based on how I use it. Okay, so understand that. Again, I trade New York ever so often. More times than not, I have my profit for the day already secured in the London session in my sleep. That's powerful. More times than not,
Yeah,
guys.
say that again. Say that one more time.
More times than not, I already have my profit secured in my sleep. So I don't even need to trade New York.
Mm-hmm.
All right. And this is what I'm trying to teach you guys. Like, yo, you know, sacrifice a few hours late at night, set your pending order or your market execution, stop loss, take profit, go to sleep, wake up. If it's still going, let it run. It's going to hit. All right. So currency quote overview, guys, real quick. USD CAD, bid ask. All right. Base currency is to the left. This is the quoted currency or the counter currency on the right. The bid price is on the left. Ask price is on the right. Bid is what you sell it for. Ask is what you buy it for. Pip is a 1 point move, okay? In the USD CAD, this is your pip, 0.001. That last decimal spot's the pip. The spread in that case is 5, basically. The reason why this 37 is because it's 1.2237. 32 and 37. So the difference between the 32 and 37 is 5. So the difference of the spread is 5. All right. Boom. Let's get to the lot sizes real quick so that way you guys understand. Earlier, guys, I said something about one lot, right? Or 1.00 is equal to $10 a pip. And this is why. You got a standard lot size, a mini lot size, and a micro. A standard lot size is the equivalent of 100,000 units of the base currency in a Forex trade. A standard lot is similar to trades. I don't know what that is. Damn, that's a typo. It is one of the 3 commonly known lot sizes, basically a standard lot. The other 2 are, you got your mini lot and then you got a micro lot. A standard lot represents 100,000 units of any currency, whereas a mini lot represents 10,000 and a micro lot represents 1,000, okay? For simple terms, I used to say, guys, one lot, or I used to call one lot 1.00, $1. I used to call a micro lot or a mini lot 10 cents. I used to call the micro lot 1 penny, because that helps people break it down basically, right? All right, so again, a 1 pip movement with a standard lot corresponds to $10. A 1 pip movement with a micro lot corresponds to $1. And then with a mini lot, or a mini lot, it's a dime. For example, if you wish to buy $100,000 in $100,000 and you are buying a standard lot with 100,000 units as your trade size, and that's what the leverage is giving you guys. That's what the brokers allow us to do. Without the brokers, we can't trade, guys. The brokers give us this power right here. All right, so in Forex, when you're trading, what we're doing is we're trading on margin. Okay. Now margin is the amount required to open a Forex position. So for instance, let's say you got 100,000 margin balance in your account, and it takes 1% margin requirement to open a position. So that means you can buy or sell a position worth up to a notional $100,000 or one lot size, right? This allows a trader to leverage their account up to 100 times or leverage ratio of 100 to 1. So you take that 1,000 multiplied by 100. That's what your broker allows you to do. It gives you that power basically to open that position. The higher the chosen leverage, the higher the available margin percentage on the trading account. But guys, I will warn you, leverage is a double-edged sword. Okay. As much as you can win with the high leverage, the same amount you can lose with it. So understand that. If too many positions are open and an order goes against you, and your account doesn't have the equity to hold them positions, you will experience what is called a margin call, which most brokers call your account at around the 50–40%. And we'll get deeper into that as well. Again, this is leverage. I kind of went over it up here. We won't do that. All right. So again, two types of trade styles and analysis. What I teach you guys is technical, but there is a fundamental side to it as well. Forex markets are, I would like to say, technically pure, meaning technicals rule over the fundamentals in this particular market. Fundamentals rule over the stock market, I would say. More technical than fundamental, but not solely relying on one or the other. I'm going to teach you a combination of both, just slightly. Technical analysis entails a study of historical currency price charts in order to recognize patterns and technical signals, allowing the trader to make a decision as to which the direction price may move next. And that's what we do. And this is how we don't gamble in the market. Technical analysis can vary from person to person. Like I said earlier, we all see things differently. Fundamental analysis is known as news trading. It's a technique used by traders who predominantly rely upon economic market releases to determine their directional bias and trade predictions. The methodology behind trading based on fundamental events is the theory that no matter what happens in the short term, the price of your currency trade or your investment will eventually follow the released economic data. Fundamental analysis also takes events such as interest rates and economic reports into account. There's a whole website that I actually check before I trade. Every new trade day, we make a note of the heavy and medium news times on our watch currencies using forexfactory.com or any other news site you wish. Let's see. I'm not going to. All right, cool. So that's all I'm going to go over right there. All right, so that's like a brief intro, guys. Once I start the course, I may or may not touch up on this again. I'm not too sure just yet, but I'm definitely going to be diving deeper into what we're about to dive into next, which is what, now you're probably like, okay, so what is it we're going to be doing, right? I'm going to pull up some charts. We're going to look at some charts, and then I'm going to just touch up on a few different concepts, basically in a picture form or a diagram, and then I will just look at some charts. But till then, does anybody have any questions yet?
Not really. No.
Are you guys following so far?
Indeed.
Bet. Cool.
Yes, sir.
That's what I like, man. That's what I like.
Ferragamo, this Mike, man. I came in a little late, bro. I came in probably at like 7:20. Did you go over anything before the theory?
Just briefly, not really. I had people like open up their broker and their practice accounts if they were able to and stuff like that. But that's really about it. And then did like a little introduction of myself, but I just really got started in touching up on like just some of the basics, you know. Um, what I went over, I have available in the pinned post as well in a PDF. It's basically that PDF, guys, is all of baby pips broken down. It's like a whole cheat sheet. Just read it, and you'll pick up on a lot of information just reading it. It's pretty simple, straight to the point. There's no adage to it. It's just basically what. If matter of fact, let me show you.
Bet. I
I can
was
show
just
you.
asking because I was late. I appreciate it.
Oh, no doubt, G. It's all good.
Yeah, it's also recorded as well.
Yes, indeed. All right, this is hilarious. So check it. Share screen. Boom. All right, so this right here, this is all of baby pips. This is a cheat sheet. This has the stuff that I'm, huh?
Well,
Yep.
bad, bro. You know, that's definitely my style. That's in my wheelhouse right there.
Oh, straight up. You know, it's a cheat sheet, guys. Like it's a cheat sheet to understanding some of the basics of the different concepts that what I'm going to be going over with you guys. So like, you know, support and resistance, with pictures in it and shit like that, right? Trend lines, how to draw trend lines. What does a trend even look like, right? This
Are you gonna
has
give this test,
everything.
or is this?
I've already given it to my group. Like I'll post the link too. Hold on real quick. Yeah, so this is everything that this has basically is what I'm teaching you guys and how to use it and when to use it and how to just tie it all together basically. Like this is baby pips right here. Like this isn't anything I've made up. This is just basically baby pips simplified. Fibonacci trading. I'm going to go deeper into that. All of this, guys. So if you want something to read currently until like the course starts, check this out. It teaches a little bit about some of the different indicators. Only thing I use is a MACD and a 50 EMA. That is it. That's pretty crazy. Oh, I'm sorry. Sometimes the RSI for the triple screen. But other than that, that's it. But yeah, it's 65 pages. It's nothing too long to read or anything like that. Print it out, hang it up. But this is a cheat right here. This right here, guys, is a cheat. The 3 cardinal rules is a cheat. This is what I'm going to show you guys. All right. And then also introduces harmonics. But yeah, let me post this link for you guys real quick.
Yeah, and anyone that's in the exchange, we'll get this. We'll post it up in the group. Once we get off air, I'll get this from Wallace.
Yes, sir.
Cool. All right, so let's get started, fellas. Let's get into the nitty gritty. Let me see, where's my charts? All right, you guys see my charts, right? Yes.
Yeah.
Cool.
Yeah, I can see him.
All right, I'm going to go to a new chart that I've never marked up because what I'm going to do now is go over some of the concepts and things of what I'm going to be teaching guys, and then mark up a chart for you guys. So, what is this, Sunday? Shit. Did I mark this up? Nope. All right, so this is the system, guys. This is all it looks like. All right, it's not a holy grail. Like I said, it's not anything special. What I teach you guys is more focused upon price action of these candles and actual structure, market structure, and Fibonacci. All right. Now, Let me get this stuff off of there real quick. Come on. Boom. Boom. Now, so what I'm teaching you guys is when it comes to, first off, Elliott Wave. Elliott Wave is a concept that describes and tells you guys the psychology of market movement, okay? And it also helps you, gives you patterns to kind of begin to recognize within the market moves themselves. Elliott Wave isn't anything new. It's been around for decades, I believe. But the basic premise, where are you? All right, so when the market is moving, price doesn't just necessarily trend in one direction. It trends for a little bit, then it takes like a little retracement or a pullback. Then it'll push in the same direction again, extend a higher low, then it'll do a nice retracement or a pullback. Then it'll push another time to a higher low, and then it'll do a little pullback and so forth, right? So it's not necessarily a straight line drive up or down. It moves choppy, or it moves in waves, okay? That's why it's called Elliott Wave. So you'll have a market movement that goes something like this. Yeah. And then boom. All right. So notice these are numbered. Okay. So this is what an uptrend looks like. As long as the market is making higher lows, you're in a trending up market. Along with those higher lows, you should experience higher highs. Okay. After the market trends, there's something called a retracement phase. Okay, so let me follow along with me. I'm about to type this out for you, or draw this out for you guys. Just follow along with me. Oh, come on, that's not what I wanted. I'm going to label this here in just a second. All right, so here's how I'm going to try to explain this to you guys. All right, so within Elliott Wave, this simple cycle, whether it's in an uptrend or in a downtrend, runs all day, every day, on every time frame you look at. So what happens is you create cycles within cycles. Okay. So from this low to this high, yeah, I don't want you. I'm not going to upgrade. No. So from this low to this high, you've got this yellow line. That's one push or one wave up in the major cycle. This green line at this high to this low is the major retracement of this low to this high. This yellow is right here, okay? Is a retracement of this low to this high. From this low to this high, this low to this high, this low to this high. Those are all impulses, impulse pushes, or trends, okay? Those are your three pushes. From this high to this low, from this high to this low, those are both retracements to the smaller pushes of the bigger push. Okay. So what we do, or what I like to do, what I'm teaching you is to look for breaks of structure. Then I teach you a multi-time frame correlation. And then I teach you price action to understand or know when to get in the market. So there's 3 charts that I have you look at before you ever enter the market, which kind of helps limit your drawdown most times, and helps you make sure you're trading in line with the major trend. So you're probably like breaks of structure, right? These yellow lines delineate some type of structure, basically. And whenever price is broken, I look for a pullback to happen, because in order for it to validate it, it has to be tested as either a support or a resistance. So we get in on either at point 2 right here, or point 4, or point C on an uptrend. It's the same way you enter a point C, 4, or 2 on a downtrend. Okay, you guys following along so far?
Yeah.
Yes, sir. Yes, sir.
All right, cool. Now, this is my trend line. These are just different tools, guys. Like, I'm going to touch up on these different tools once I get the whole course started and stuff like that. I'm just trying to do this real quick for you all. So that way we can look at a chart, I can mark it up and point this shit out to you guys on a chart. Let's see. These are trend lines, which are tools that we also use to, help judge as far as like our entries and things of the sort. And so once you add these to your price charts, these build what is called a list of confluence. Confluence is things that help, or things that tell you, basically which way you want to be trading in alignment with, right? Whether it's a buy or a sell. And of course, like I said, if you're growing long, if you're in a bull market, you're trending up, or you're looking to buy, wait for a pullback. It met some kind of market structure over here, met with a trend line. In this area right here, I tell you specific candles on what to look for, when to enter, guys. This is what I'm trying to tell you. Like, the system's so specific, right? It's actually specific candles, patterns that we look for to enter. And that's why the system is, honestly, it's easily duplicatable, because it's not nothing that you have to buy, add to your chart. It's not an indicator. What I teach you guys is basically price action with a different type of look to it. Let me see. So this is the base of Elliott Wave. Okay, guys. Elliott Wave teaches you characteristics about wave 1, characteristics about wave 2, characteristics about wave 3, wave 4, wave 5, and the ABC correction. It teaches you different characteristics about the candles that are forming these retracements and things like that, guys. And if you put this together in alignment to the candle patterns that happen on the chart, like, you increase your probability of things going in your favor. It's pretty dope, honestly. Let me see here. Let me get this off of here. Boom. So that's that. That's what I'm going to go over on this chart. All right. So this is the Euro New Zealand dollar. I don't want that one. Oh, let me introduce you to the software. I'm sorry, guys. What I'm using is a website. There's an app with it as well for the mobile. Again, I use TradingView for all my chart markups because of the capabilities that it has over MetaTrader 4, the actual program. Once I start the course, I'll show you guys how to set up the different charting templates and things of the sort, like I have here in my favorites bar and things like that. But for right now, just sit back and watch. Just here's your bid and your ask, right? This one's quoted to the 5th digit. So the difference between this and this is 4.6. That's your spread. So if this was connected to the broker, depending on who the broker was, this would be like your quote unquote broker charge to some brokers, depending on what type of account you have. Let's see. So the way I've got my chart set up, what you're looking at, okay, it's called a candle bar. Each of these red and green things are called candle bars or candles, Japanese candlesticks. And what they represent is movement of price within a certain time frame. Hold on real quick. That's crazy. Ooh, that's deep. Hold on. Yeah. All right. So back to what I was saying. Each of these candles represent the movement of price for a moment of time. Okay. We changed that moment of time right here. So you can get it all the way down to the second if you buy the actual program, but you can break it down from the minute to the month or even to years. But we don't use none of that. We mainly focus on these charts right here and break it all the way down to the minute. So right now I'm on the 1 week chart, right? So what that means is each one of these candles represents the movement of price for that full week. If I go to the 1 hour chart, it looks a little different, but it's still the same chart, Euro USD. I'm sorry, Euro New Zealand dollar. And each one of these candle bars represent an hour of time that price moved on this currency pair. So as you see, green means price went up, red means price went down. Let's see. And so let me get started with this system. So right now, what I'm going to do is mark up this chart for you guys and give you guys a brief overview of the full system and what I'm teaching you guys, okay? So every fresh chart, what I look for or how I start is I mark up key levels. And the key levels that I mark up first, they're on the monthly, the daily and the weekly charts, and they're based off price. Now, these key levels come from the quarters theory book, and that says that price doesn't necessarily move randomly, which I don't believe price moves randomly at all. I believe like it's manipulated, like we said, like these hedge funds and these central banks, like they have targets, right? Like if they really want something to happen or go down, that's when inside trading and things of the sort happens and you get hit with these fines for market manipulation. So I don't think it necessarily moves too randomly at all. And what quarters theory says is we take in consideration that price moves on average within a month, depending on the currency pair you're looking at, 1,000 pips. All right. So what I do is I mark off 1,000 pip zones or ranges. And as you all will see that these areas that I'm marking up, they're going to be nice round whole numbers. And you should be able to see how price actually respects and reacts to them. So let's get started real quick. So I have a horizontal tool, line tool that I'll have like preset as a template. Now we're looking at the Euro and New Zealand dollar. Right now, Trice is trading at $1.80 and some odd change. Let me see if I can blow that up for you guys. There we go. So what I want to be mindful of is, just like certain little points where the market hit and bounced off of, right? Not like all this choppy stuff in the middle, but like the major trends, this high to this low to this high, so forth. And more times than not, if it was on the euro, I would start at an even $1. But since we're at $1.40, $1.50 already, $1.70, this from 160 to 170, that's an increase of 10 cents, but that is 1,000 pips. So that right there lets me know that, you know, I might want to double up my range of 1,000 to 2,000. So what I would do is, you all see how this was a hit right here. This was a hit. This was a hit. It hit around the $1.50 area. So I'm going to take note of that. And I'm going to be very precise in with my numbers on this, because as we go to the lower time frames, you guys will see why. Notice I've got that as a hash line. Every template or every tool that I use has a different color on different time frames. And I'll release that as well. So from 150 on a normal pair, I would go up 10 cents to 160. On this pair, I'm going to double that up and go to the 170. And that is now a 2,000 pip range, okay? I'm going to create another zone up above it. So from 170 to 190. Though I already know the prices I'm going to use, guys. I want you guys to pay attention to how these candles are hitting at these levels, right?
It went black. Just me? Is my screen black?
Are your screens black?
Mine is. I'm not sure if everybody else is.
No, I'm still seeing stuff.
Okay, cool, cool. I don't know what's going on.
I'm good over here.
Turn your phone a little bit or something. I don't know. It might be a user error, bro.
Not wrong, man. It's a damn Microsoft.
Oh, man.
Try, if you have to, just log off and log back in.
I can't see anything. My screen went black because.
Oh, yeah, that's
Close your app and open it back up.
Unless you have your screen sleep on because you haven't been touching your screen.
That too. Because we still hear you. Like,
Yeah, I know. I hear you. I just
that's
can't see
crazy.
anything.
There you go. Came on now, didn't it?
Yep, I'm back.
190. Oh, no. That's 2.
You do that, Brian?
Brian turned you off, bro. Let's see. All right, so let's explain this a little bit.
You go over a little bit back a little bit. I didn't hear anything you said before that. I couldn't see anything he's doing.
Yeah. I was about to real quick.
Okay.
So, from this white hash line to this white hash line is a range of 2,000 pips. Okay. Normally on like the Euro USD, the most traded pairs or the heavily traded pairs, you would use a 1,000 pip range, but this one, it moves so much that I use 2,000 pip range. Okay, so I just basically doubled it. But what I want you to pay attention to is that I'm using whole numbers. There's not, whole numbers. And look at how price respects and reacts to each of these levels, right? So, and this is on the monthly and the weekly time frame, guys. So if we know that price in history of price has reacted at these levels, we're aware that, we can potentially enter off of those same levels, whether it's a scalp, swing, or a trade, because you're looking at a very strong support or resistance. Okay. Now, to cover what is a support or resistance real quick for the new folks, current price at this red hash line, since it is below that red hash line, a resistance, it would be a resistance. So it would be a ceiling. Price can't go up until it breaks through that. So unless it breaks through that ceiling, we would be looking to short at a resistance. Okay. Since price is above this hash line right here, it's known as a floor or a support, right? So when price approaches it, we're looking to buy. You want to buy at support, sell at resistance met with market structure. and we're going to break that all down. So what I marked up is based off the quarters theory. Basically, you know, it says the market price doesn't move randomly, but it moves within 1,000 or 2,000 pip ranges, depending on the currency you're looking at. So this is a book or in a PDF that I'll release for you guys that you guys can read and study. Like I said, if you just study, it's going to take your, your trading to another level. And once you have them drawn on there, like you don't have to redraw them every time you go to that chart. Only time you draw a new zone is if price enters either up here or down here where I don't have another resistance or I don't have a floor. I've got to wait for it to be created, basically. So now that I've marked those up, I'm not really paying too much attention to anything else, guys. Okay, the reason why I'm saying that is because I don't want to enter based on the monthly chart. I want to be able to enter like right now or shortly here in the future. Okay, so I take a look at the daily chart. There are 3 time frames that you must identify in order to take a trade. And this is when you get into the time frame correlation, okay? You have to identify a structure chart. You have to identify an entry setup chart. And then you have to identify the candlestick pattern. All right. Once you identify successfully the first chart, based on the system I teach you guys, it's going to recommend your entry setup chart. Based on your entry setup chart that's recommended, the system also recommends a candlestick pattern entry chart. Okay, and those are the 3 charts that you have to identify. So more times than not, your structure chart is going to come from the daily, the 4-hour, or the hour chart. Your entry setup, depending on what your structure chart is showing you, is going to come from the 1 hour. Oh, come on now. What you doing, G? The 1 hour, 30-minute, or the 15-minute. Based on your entry setup chart, your candlestick pattern chart is going to be either the 15-minute, 5-minute, and then we can go all the way down to the 1 minute. Okay. Now, depending on your structure chart, it's also going to determine what type of trade. Okay. So if you enter in off the daily, if you enter it if you enter an order based off structure on the daily, you're definitely entering a swing trade. That trade can be potentially held for several days to several weeks. It also could take several days to play out. Okay. If you enter in structure chart based off, if you enter on the 4-hour structure, you're in a intraday or swing. If you enter off the 1-hour chart, you're in an intraday scalp. Okay. The difference between an intraday swing and an intraday scalp is the period that you're potentially able to hold them. So I consider a scalp, more people consider a scalp like, get in and get out immediately like that, right? Or, 10, 15 minutes. That's a scalp, I guess. Well, I guess I should just name it short term. That's a better choice for it. So the difference between short term and a swing. Short term, if you enter in off the 1 hour, you're going to potentially hold that trade for a period of, I would say, depending on what your goal is personally, but based on this system, you're going to hold that trade for a period of 4 to 8 hours. If you enter it off the 4 hour, you're going to hold that trade for a period of at least 8 to 16 plus hours, right? So as you all can see, depending on where you find your structure, it's dictating what type of trade you're entering, which basically keeps you from guessing what type of trade you're actually entering, right? Whether it's going to be a swing, whether it's going to be a scalp. And that also helps maximize your profit potential, okay? So back to the charts. So before I ever, like I said, before I ever enter, I have to find my charts, right? My structure chart. And you're like, what do you mean by find the structure? Basically, I'm saying, where do I see my breaks of structure, or where do I see my Elliott wave, or where do I see price action the clearest? So as we can see from this low to this high, all this right here, you know, this is at a structure, this is at a structure, this is at a structure. Those are the same structures from the monthly chart. I can enter off of those, but again, like I said, I want to be able to enter, you know, some either now or immediately in the future. So I always start with the daily chart after I marked up my monthly key levels. And I take note of the last few candles and whether or not it's at some type of structure. Okay. Because I want to trade in line with the daily momentum or where the daily volume should be trading at, right? And that's why I use the MACD. This is where the MACD comes in handy at times, okay? I'll go deeper into how to use this indicator later. But briefly, just as a brief introduction, it's got two moving averages. These moving averages, I could have put them up on my screen, but I like them on the on the MACD. So whenever those moving averages cross, kind of like Luciano back in the day, Brian, right? You're looking to follow that momentum basically of this blue line.
Yes,
Okay,
sir.
this is a modified Luciano, bro.
Yeah, it just doesn't have the double pillars and the
right, exactly,
come on.
exactly.
Yo, I got the whole old Luciano. I got all. I still got all the W3A stuff, man, for sure.
That's dope, bro. I saw my drive somewhere. I got a whole old computer filled with Forex stuff.
Access to it right now, bro.
That's
how I started.
That's dope.
Yeah.
Okay, so as we can see, let me blow this up here. So as we can see, right, like they're all kind of already starting to cross, right? So that's one dynamic of this indicator. The next dynamic of this indicator, we have these bars. As we see these dark green bars and this Luciano line right here, this blue one, the market was trending. Okay, that means the bulls was in control. All right. So now that we're looking to enter in some type of bearish or some type of correction, you've got the bulls have dried down with the lighter green bars. It had another retest right here. But again, the bulls have dried up, or they're drying up. So now we're looking for the bears to take control, right? So now you've got crossing of the moving average, smaller bars, light green bars telling you that, hey, momentum may be going to the short side, right? But if you look up here, price was already telling you guys, you know, a kind of a short situation, right? You got this two candle formation right here. This bearish candle actually engulfed the previous day. Now I'm paying attention to all this, and that's letting me know that, you know, I might be looking for a short situation, right? So if I'm looking for a short situation, I'm not just going to go short off the 1 hour. I'm still going to take a look at the 4 hour just to see if I see any type of structure clearer. And voila, I see this way clearer than the daily. Not only that, I can enter off of this. So what you guys will be able to identify eventually is this Elliott wave shit right here. Right? Does this look familiar? This is what I'm teaching guys, right? So after this fifth push up, we're expecting a nice retracement. Whether it's an ABC, a simple ABC retracement, I don't really know. But I do expect it to do something like that. I tell you guys that, right? And not only that, like my MACD, So take a look at this, right? On the daily chart, it looked like it should be, you know, beginning to go bearish, right? 4 hours telling me. Not only that, I'm not really paying attention to that. I'm up here at the charts on the price. These heavy candles, they're already telling me something that I can go, you know, potentially bearish. But this isn't enough information for me to enter, okay? Yeah, I seen some structure. I could mark it up if I wanted to. But before I get there, I'm going to take a look at the 1 hour and zoom out. Okay, so the 1 hour is a deep look into this move. So now it's not no longer between the daily and 4 hours, but between the 1 hour and the 4 hours. So what do I want to see? I'm going to follow the heaviest. In that situation, I want to follow the higher time frame so that I'm trading in line with the heavy momentum. Does that make sense?
Yeah.
All right, cool.
Yeah.
So since I'm going to use the 4 hour, right, as far as like my structure chart, I'm going to finish marking it up. Let's see what I can see. So I got some Elliott Wave. I want to mark up 3 things. I want to mark up most recent breakup structure. I want to mark up where do I think structure should reach as far as the direction that it's currently going. I want to mark up structure that if broken, it will continue in that direction that it broke. So again, most recent breakup structure. Let's find that out, right? So we know that this was a high, the last high, right? And then this high right here slammed right back within that high. So I want to be mindful. Where'd it go? Uh-oh. And again, guys, all of my tools are color coded so that way I know on different time frames what type of structure I'm looking at when it comes to these lines and these drawing tools. So this is the high that broke through and retested, okay? Let me type this out real quick. What I'm typing out is big key pieces of information. What was I gonna say? On structure chart, find most recent breaker structure, price go to intensity reach, structure. Okay, cool. Boom. So I'm using the 4 hour as basically my structure chart. So this is structure that was broken. Ah, that's right. All right. Come back here. Boom. Okay, so on my structure chart, I've got to find my most recent break of structure, structure where price could potentially reach, and structure where price, and structure that if broken, price would continue in the opposite direction. So this first one, hold on, somebody's echoing real quick.
What do you mean when you say by break of structure? Which part is it breaking of the structure?
Good question. I was waiting for somebody to ask that. So structure, for simple terms right now, is I mean the highs on an uptrend. If the high was broken, right? So let's take a look. Let me draw this out for you guys real quick. All right. So let's zoom in real quick and I'll show you guys what a clean break of structure is. So we've got this trend up and then a retracement. Okay. We enter at point 2 of the retracement. And more times than not, most people take profit once this structure or that high is retested. Okay. In order for a high or low to be considered a high or a low for like the day or the week, it has to be validated. And the way it validates it is by testing. Price will test it. For instance, this high gets tested right here and right here, and it shoots off. That creates structure. Now, there's different types of structure. You've got major structure and a minor structure, okay? We go off the major structure. Now, we'll go deeper into that later too. But this is the structure that I'm talking about. Now, what does a break of structure actually look like, right? So a break of structure based off what I typed up requires 3 candles with 2 being in the direction of the trend that broke. Okay. So this candle, and this candle are the 3 candles that I'm talking about. Okay. They broke this structure. This first candle closed above that structure. This second candle, which is something that we want to see, was bearish, but it had no type of body or any type of momentum to it. And this is all something that we're going to get deeper into as well once I start the course. But it had no body. So that's the second candle. Then my third candle told me the direction to go after this break of structure. And that's what I'm telling you. That's why I say, it requires 3 candles. And you want to have 2 of them candles in the direction of the break. So that's the first break of structure, right? Let's go to the next one. Here's your high, right? Major retracement.
So those 3 candles always tell you that it's going to continue in that direction, or if it's going to redirect.
Correct. So here's your other high, right? Your next high. You notice a nice retracement. Price came up to it, pulled back down. Now, what do we notice about this break of structure here? You still got 1 candle, and you got 2 candles, but you have 3 candles to that break of structure. So that was the break of structure. We don't enter long just because it broke structure. We wait for the retest from this low to whenever it begins to retest, right? Or whenever it begins to, oh shit, mine just went blank, retrace. So this candle heavily retraced to it, that same structure, right? Guess what? It didn't close, it didn't break. It didn't have the 3 candle break of structure. So now you've got the momentum still carrying on into where we are now. The high was retested and it's now shifting away. This is the change of momentum. Now, the change of momentum, whether or not it's a full retracement or just a minor correction, that's what we're going to get deeper into once we get the course as well. But again, we had a 2 candle break of structure, right? But look what happened on the third one. That's not a valid break of structure. Because then once you do the structure test again, guess what? First candle, second candle, third candle. You want 2 to close in the direction of the break, right? These 2 didn't break or close back above that structure over here. So look what happens. You went short. And that's why I tell you guys, a clean break of structure requires 3 candles with 2 being in the direction of the break. That's a huge P. That's a huge diamonds. Like that's a nugget. Like people don't teach you. That's price action, guys. Like that's not a strategy. That's not nothing. Like that's a key piece of information that most people do fail to tell their students. It's pretty crazy. Like what is a breaker structure? How do you identify it? And that's how you identify it. Hopefully that nugget right there alone helps you guys tremendously.
Can you go over that for us real quick, 1 second again? Do that one more time.
Yeah. So
The three candles.
Yeah, the 3 candles.
Yeah, the one that didn't break.
Yeah.
Okay. Yeah. All right. So you've got, this is the structure that these candles are breaking. Okay. So you've got 1 candle, 2 candle. Yeah, we've got 2 candles that closed. But again, what did I say? A clean break requires 3, with 2 being in direction. 2 are in the direction, but that third one, it came back down and slammed back below that structure there. The structure. So had you seen that, again, that's when that structure shit restarts. So now you've got 1 candle. Your second candle didn't close or break back up beneath it. And in fact, that was just a retest on a lower time frame, and we can actually take a look at that. And I'll show you some stuff about this actually. We're going to take a look at this area on a lower time frame. So you got 1 candle, 2 candle, your third candle. 2 candles are in the direction of the break of the most recent break of structure. So that happens. And that's what in this case, it broke 1, 2, 3. The single retest didn't break back below that structure, so it bounced off of it. It validated now as support. When price is below like this, again, you got your ceiling, your resistance. When price breaks and comes back down and fails to get back below, it's validating it now as a support.
So in the middle of all that, like how would you even make a trade in like, are you just waiting for the retesting or the candles? You know what I'm saying? Like in the middle of the whole wave, like are you just sitting there waiting, looking at the whole market, you're not making a trade or anything like that at all?
No. There's 3 things we wait for. All right, so once we see after the break of structure, we are waiting. You're sitting on your hands.
Caesar literally just said those same exact words. Well, we were muted. Daniel asked, he literally said, you're sitting on your hands.
You're sitting on your hands, guys, and you're waiting for 3 things to happen. You're waiting for a retest.
Yes, sir.
To broken structure. Oh, wow, I can't spell today. You're waiting for rejection at said structure. Retest, rejection. What else do I say?
RRR.
No, Ryan's thing is the RRR. What does Ryan say? Retest, rejection, and what?
Do you guys remember, Daniel, Paul?
What was the question? I'm sorry.
What are Ryan's 3 R's? This will help. Yeah, this will help you tie it together actually.
Retest, rejection, and
I forget the third one, dog.
I don't think I've gotten that one from Ryan.
Ah, man.
Caesar will correct us all when he gets back in here.
I know you will.
I'm drawing a blank too, man. My mind's racing about packing and shit.
I swear. Retest, rejection, and then Well, I'm gonna just leave it right there. We'll leave it 2 for now, because there's actually more things I add. But I want to hear what his third one is, because I completely forgot about that. All right, so here's what we're doing. This is major structure. All this right here is major structure. When the market pulls back, like when the single candle bars or like 2 to 3 candles in the opposite direction, that's minor structure, okay? Even though it's minor structure, it's still structure that we kind of want to be mindful of in certain situations. All right. Now, the reason why I marked this up, this is minor structure, and here's your breaker structure, right? 1, 2, 3, it goes away. Now, look what happens to that retest of that structure. It shot off pretty heavy. So that's why I want to be mindful of this structure, because I believe price could potentially push back down to that structure. And not only that, at that structure, this is a heavy key level. So keep that in mind as well.
Are these structures in conjunction with the Fibonacci?
Yes, and we're going to get into that.
Love
So,
Fibonacci's.
oh man.
Hungry.
So it's React. React is the
Yes, React.
projection and React.
I'm gonna put that on there. That's what it is, React.
That's what I said, bro. I said React, man.
Oh, did you
Yeah.
really?
Nah, I didn't say that shit.
All right. So, and boom. So we've got the first portion of the system right here.
Scare all the little kids on the pool.
All right, you guys still hear me? Or did my earpod died? Hello? No, okay.
Yeah, you're good.
All right, so all this is
Yeah.
basically, you know, the first portion of the system. This is all on our structure chart. You know, you want to find the most recent breaker structure. Structure price could potentially reach, and structure that is broken, price would continue in that direction. A clean breaking structure requires 3 candles, with 2 being in the direction of the break. I also went in deeper to that on that 3rd candle, or any one of the candles. If it ever slams back and closes beneath or above the structure that was broken, depending on the trend, it's not a valid breaker structure. That's a retest. So that's why I consider this a retest and not a breaker structure just yet. We want, after the breaker structure, we're waiting for 3 things. We're waiting for, well, actually 2, because we're going to do the 3rd thing. We're waiting for the retest to the breaker structure. And then we're waiting to see rejection at that said structure. And then we're going to react at that structure, okay? So with this being an uptrend impulse, this right here, I would say will complete a ABC retracement. It could honestly do whatever the hell it wants, but I'm speculating it as an A, B, deeper retracement C. Okay, before we enter in for the next buy. All right.
And you said C all the way down there because A already came back to that last
Correct.
key level, right?
Correct.
Okay.
A came right here. This was a minor test, but if you look from it from this low to this high, it's not really another retest to this. So it'll have another strong push, I believe, to that level. And honestly, this is where, you know, you catch your 30 to 40 pips and things of the sort. But here's what I want to see real quick. Let me take a deeper look at this structure up here before I tell you guys to buy, because I just remembered that on our daily chart, right, we had that engulfing. This is an engulfing. If I zoom in on that, you see that engulfing? I want to be mindful of that. So that's why I'm saying, hold on, before I tell you guys, you know, hey, let's buy. Even though it's in an uptrend, on the daily chart, what we could be seeing is like a heavier retracement to even the top of wave 3 or to the bottom of wave 4. So let me go back here.
Is the Elliott Wave always a 5-point thing, or is it like could it be more than 5?
It's always a 5-wave trend or impulse up. So let me show you. So even within this right here, you should have 5 pushes towards this high. Within this right here, you'll have 5 pushes, but it's an extended wave. So within that 5 push, you'll have another set of waves that does its own 5 pushes, which makes this one the extended wave. From this wave to right here, you should have, again, its own 5 push. Let me see if I can try to point that out for you so that way you see it just barely.
I didn't mean to get you off
Can
track.
you
Sorry.
see those 5 pushes on a lower time frame?
Yeah, yeah. I'm gonna draw it right here on this time frame, and then I'll show it to you on the lower ones. It'll be picture clear on the low ones, or it should at least. Let's see. And I'm gonna change the color, so don't front just yet. We'll change it to purple, and then I'll do 1, 2, 3, 4. Now this is on a 4 hour, so if I go to the 30-minute and I back up, I'll kind of zoom out. I'll clean it up for you too. But this is the extended wave that I'm talking about. From this right here to right there, that's an extended wave. And how I know that this is the proper Elliott form for this is because I look at the retracement waves. And based on Elliott Wave Principle, the retracement waves should alternate as far as the type of pattern that they form. So what it says is wave 2, if wave 2 is a deep retracement against wave 1, then wave 4 should be like a sideways shallow consolidation, okay? And it says the vice versa. If wave 2 is the shallow sideways consolidation, then wave 4 is going to be the deep retracement, okay? Now, take a look at this. Keep in mind, I drew this pink one on the 4-hour time frame, right? Not really being able to really see the whole thing, but if we look from this low to this high, this right here is a sideways consolidation, right? From this bar to this bar, that's a sideways consolidation versus this retracement, right? And coincidentally enough, where I have my wave 2 and my wave 4, that's where they're at. Another thing about Elliott Wave is it says that 2 of the pushes in the direction or in the trend should trend towards symmetry, or they should be almost equal length in trend. So if you look from this low to this high, this low to this high, those are almost the same length as far as a trend. It also says one of those pushes should be an extended move. Y'all seeing all that?
Or the impulse move.
Right, the impulse should be extended move. Right. So, but keep in mind, guys, I drew this pink one based on the 4-hour, not even being able to see all this clearly. But once we take a deeper look at that structure, it plays out just perfect.
Inception. Yep. Yeah.
Right?
Yeah. Well, so when you say symmetry, that's what's the term? Equal measured move.
Yeah.
Right.
Right.
So,
Right. Equal measure move. Now, it's not going to be perfect, but I mean, just from looking at the naked eye, those seem pretty symmetrical to me, right?
Yeah.
Yes, sir.
Right. Exactly. And this is all the stuff that I'm going to be teaching you guys. Like, I'm not making this stuff up from new, but like, this is some hot shit, guys. Like, this has been around for years. You know what I'm saying? So, and this is the sauce that I'm giving away for free. But it's coming. So let me get this out there and continue real quick because we haven't even finished anything just yet. So let me get that off of there. All right. So go back to the 4-hour. So now that I've got the 4-hour pretty much marked up, as far as like breaks of structure, I see this right here. Now here's the thing, guys. Okay, we're trending up. Daily said this at this key level on the daily, it went short. So honestly, I should change this right here from a purple to an orange because it's off of a daily structure. And I want to be mindful of that. And notice how I have everything labeled and color coded, right? It helps keeps your charts clean. That helps you understand what you're looking at as far as structure. Not only that, it's going to help you prioritize the structure and things of the sort. For instance, right here, this red dotted line is something that's based off the monthly and weekly time frame. That takes priority over this purple line. So if price never breaks this red line, we're still going to the long side, which in the overall gist of stuff is indeed the right way to be going, right? So what we're catching is a retracement. if we go short, understand that it would be a retracement. Now, how deep of retracement, we don't really know. And that's what's so dangerous about counter trend trading. But if I see that, you know, if I'm able to, if I feel like on the 4 hour or the daily, if we're in a retracement or a counter trend trade, if I can catch 20 to 30 pips, bro, I'm taking that trade because it's worth it. Let's see. So keeping that in mind, that it bounced off the daily and it had a break of structure. Now, the break of structure that I want to be mindful to, since it bounced off of this high right here, is the first low. All right. And that first low, coincidentally, happens to be with this high over here from this minor structure. Right? Boom, break, and it's breaking, right? So since I see this is the most recent momentum, I'm paying attention to these candles right here to see if their bodies of candles are making a swing point. All right. Now, what makes a swing point? A swing point consists of 3 to 5 candles, and it looks something like this. Whoa, where am I at? Where's my drawing to? All right, so on a swing high, you should have something that looks like this, right? Where you've got an initial high, a point that pushed it up just a little bit higher, and then you've got a retest to this point. So you've got a high, a higher high, and then you have a lower high. That whole thing creates a swing point high. Swing point low is the exact same, the exact opposite in a certain sense. So you got that low.
So the swing points are head and shoulders?
In a sense, correct. So let me point this out to you. So with the candles. So initially, let me see, where's it at? All right. So you've got this high, and you've got that high. They really cross that point, but you've got that extension of the high. So you can start from this high, which is 2 points, that extended high, then this lower high. You see that?
No.
Okay. It's not, it's okay. So don't picture it as a perfect head and shoulders. Okay. I'll use this 3 candle structure then right here.
If you go up in a higher time frame, it'll probably be, it might be a head and shoulders.
Right, right. So let me point out this structure right here. Let me highlight it and I'll show you guys what I'm talking about. It's typically 3 to 5 candles. So I'm gonna start with the 3 candle one right here. Okay. So we've got a high, another high, and then the lower high. So the highs, I'm going off the wicks, guys, right? On this 5 candle one right here, you've got an initial high with these 3 candles. You've got the higher high with this candle, this candle, this candle, and then you've got a lower high over here with this single candle. That's creating a swing point on lower time frames. Now let's zoom in to this structure right here, and I'll show you. Where you at? Where are you at? Boom. All right. This is all right. So you've got on this 3 candle right here, you've got this initial high with this wick. This second candle extended the high, and then this bearish candle, even though it wicked up, that's the lower high, a swing point. We typically, this is a perfect swing point. You've got an initial high, high that got extended, and then a lower high. That's also a 3 candle pattern off the structure. So those are kind of like swing points that we're going to be able to pick up on once I teach you guys price action of these candles in the course and things of the sort. Let me see. Oh, bro, it gets deep, man. Once I get into explaining everything, bro, it gets pretty deep. So let me finish marking this up. So maybe we might be able to take a trade off of it. Euro NZD. All right. So since we're at current structure, right, what I'm paying attention to is on this last push, it rejected. It failed at the high. So this may be a change in momentum. So not only that, it didn't break back above this high after this retest, right? So based on the daily chart as well, we had this engulfing, which kind of lets me know that the bears may be looking to take over. We added our MACD, the bulls look to be drying up. So we might be wanting to take a short, whether it's a correction or whether it's a deeper trend, right? So off of this change in momentum right here, what I want to see is a retrace or a pullback to one of these two levels for me to enter. It may not even reach there, okay? Because if we look right here, that's another minor structure that price is currently at.
Hey, Wally, you want to hit mute?
Yeah, I'm about to.
Just mute everybody real quick.
Ooh, boom. All right, so what I do, since we see this as a bearish momentum, we already found our structure. I'm looking for an entry setup chart now, guys, right? So I'm going to decide between the 4 and the 1 hour, probably the 4, which chart I want to use as my structure chart, okay? Ooh. So, dang, dude. Still gonna go short. Get off of there. So I'm using the 4-hour chart as my structure. The time frame that's recommended off the 4-hour for my entry setup is the 30-minute chart. Okay, so the 30-minute looks pretty crazy in comparison to the 4-hour, right? What I want to be paying attention to is how are the candles or how is price reacting to like these levels from the higher time frame, right? This is the daily. This is a 4-hour. This right here is the monthly. And this is what I'm telling you guys, yo, monthly is going to take precedence over the 4-hour. So right now, all these candles are still closing above this monthly. Okay, so I'm still going to be looking for a short, but I'm understanding that if I go short, in order for it to be a longer term trade, it's got to break this right here, right? I'm not entering just yet, guys. Trust me. It's far from being ready for entry. So I can take a peek at the 1-hour chart just to see, you know, hey, what's it doing? And we see the momentum here. We see the momentum here. Now we see all this consolidation. If I was to draw a triangle, that's what type of pattern that is. A wedge, whatever you want to call it, a pennant, however you want to say it, right? But Elliott Wave will actually tell us the different wave cycles within this right here. So what I'm paying attention to now is price action. What's actually happening with price action? And as we see, if we zoom in, even though this is a pennant, price is still closing lower with lower highs, right? All at the same structure. Notice though, on these pulls up, they don't really have too much momentum, okay? Not only that, on this last structure or this last piece right here, there's not a clean break of structure. Remember, I said it requires what? 3 candles with 2 being in the direction. So unless this candle right here has some heavy momentum up, guys, it's not a valid break of structure. Now, I will actually, and for me to get in short, I want to see it come back up and retest this structure. so that way I can maximize my profit. But I don't feel that it will, because look at the 4 hour, it's not really got any bullish momentum to me. It's not really, but again, it is Sunday, so that could be it too. So 4 hours, my structure. I'm using the 30 hour as my entry setup. So now what do you mean by entry setup, right? I want to fib from this high to this low. And more times than not, everybody says they want their entries to be in between the 618 and the 886. So what this could be is, how do I explain it to keep it simple? I can't really explain it to keep it simple, so I'm not even going to dive into that. So from this low to this high, our entries with this system come in between the 618 and the 886, met with structure. Coincidentally, the 786 right here fib is met with the bottom of this structure. The 618 is met with this structure. The 382 is met with the high of this structure over here. And then we've got our moving average. Moving average, until it's broken, you just follow it. Okay, momentum tells you that it's low, that it's going short. Consolidation to trap and confuse you, right? It may do a nice heavy push up, which is what I want to see. I want to see this push up. And when I see this push up, I want to see the rejection. This is where Ryan's system comes in, right? Here's a breaker structure. We wait for the retest, we see the rejection, and then we react. All right. Now, when we go to react, we're on our entry time frame off the candlesticks, looking for the price action to react with. And that's pretty much the whole system, guys. But so, any questions so far? I'm going to do a quick markup of another pair, so that way I can walk you guys through it quickly without any type of like interruptions. But are there any questions real quick?
Do euro. No, that's not a question.
Euro?
Yeah.
I think it's already marked up, but I'm going to take a look at it. Hey, it may not be. You got lucky. Oh, it's partially marked up. Wait a minute. It's actually.
Where do you get these lines from? These dashes and the red lines? You put them there yourself?
No, it's actually just a template. So like, I'm gonna teach you guys how to set up these charts and all that stuff too. Once we start the course, but it's a template. So like, once you have your line set, like you change it right here. Then you can go in here and change like you can add text to it, change the style and color, the thickness of it, and then save it as a template.
Okay.
But I'll show you how to set that up eventually. So as you all can see, this is already marked up. So I can honestly go to the daily chart and try to look for an entry. I'm gonna take this off of there, take all that off of there because it's old stuff. All right, daily chart. This is how I'm taking a look at it. So first thing I'm paying attention to is this whole structure area right here. I see we're in an uptrend, and I can honestly, keep marking it up if I want to. So that way I'm aware of different things, right? Uh-oh, hold on real quick.
So when you do that first markup right there, you start on the lowest low, and you start from there, from wherever it's going, if it's an uptrend or a downtrend.
I start from wherever I see price is closest to. So these key levels, they're based off of subjective whole round numbers. So more times than not, a currency pair starts at an even dollar, and you just count from there, 1,000 pips or 10 cents in one direction or the other, just to create your zones. So on the euro, if I'm starting from a dollar, 1,000 pips is actually 10 cents. So $1.10, you got $1.20 up here. Then I cut them in half to create from this line to this line is 500 pips, but from this line to this line is 1,000. And as you honestly look back at it, price isn't really so random. It kind of respects, well, I ain't gonna say kind of, it heavily respects those zones. Let's see.
Is that for every pair? You do that?
Any pair that I look at that doesn't have it, yes. Let me see. So let's get back into it. No interruptions real quick.
Sorry.
Oh, no, you're good. You're good. I was talking to myself. Finishing webinar. All right, bet. All right, so when I'm on the daily chart, I'm basically trying to look for structure, and I'm definitely paying attention to where has the momentum shifted to, or where is it currently at, right? So again, even on the daily chart, we see this high, right? And this attempt to break that high, that never happened. So I can mark that as my most recent break of structure on the daily. I think we got a chat. Hold on. Boom. Yep. All right, cool. So, that's not it. I would say right here. Now, once we get into the system, instead of lines on these higher time frames, I'll actually be creating like zones and stuff like that. We'll get deep into it and create zones, but I'm just using lines right now to kind of help speed it up. So we see that, structure hit, it hit, came back, another hit, and came back, right? So that kind of lets me know that, prices kind of rejecting, right? Here's my most recent break structure. Remember me telling you that 3 candle patterns, right? First candle broke the structure, second candle retested, third candle again continued in the direction of the break. That's letting me know, hey, that might be some a change in momentum, especially since it's already hit that same structure twice and it's actually closing below this monthly key level. That's letting me know, hey, I'm just looking for momentum. Lines are still beneath each other. We have heavy red bars, right? That shows bears may be in control. So I'm keeping that in mind. Let's pay attention to the 4-hour. Now, the 4-hour, I want to pay attention to, again, the most recent break of structure, right? This is the most recent break of structure. I'm paying attention to this whole move, okay, right here as well. If the daily hadn't had this and this rejection right there with an engulfing, okay? So what we're looking at is a change of momentum. We're looking to go short to either catch a retracement or to catch anything, basically, whether it's a scalp, swing, or a retracement. Basically, we're looking to go short, following the momentum. 4 hours showing me that this is a recent break of structure. This is going to retest this structure that over here that was broken. This retest is what we want to see, because at that retest, we want to see rejection. So that way we can react off of it, right? Now, see this candle right here. See these candles right here? That structure that was broken. And I want to be mindful of that as well, because on the lower time frame, I can read price action. That's going to allow me to trade off of it. So in a normal instance, if we've seen something like this, we're looking to buy. The reason why we would be looking to buy is because of this right here. Okay. This is in a normal instance. If the daily had not shown us that change in direction on that third hit towards the high, we would be looking to buy off of this structure. Now, instead of looking to buy off this structure, what I'm now doing is, you see here's a shoulder, a head and a shoulder. Looks to go short, right? It already broke this daily orange structure and closed below. That tells me to go short, right? And it's also closing below that monthly. Also tells me to go short. Also, we had that engulfing candle on the daily. Up here, 3 candle breaker structure with another engulfing. All that stuff right there is telling me to go short. But now it's all about when do you go short? So to find my short, and again, guys, I'm fibbing from high to low, letting the market retrace into structure that was most recently broken. Hey, look at that, right? That structure that was most recently broken is met with daily structure, and our fib levels of the 618 and the 886 is where we look to enter. So I can honestly scoop this over, you know, and I'm just, again, being patient, okay? I'm waiting for the market to either hit right here, or since it's at this structure, I can pay attention to the 30-minute chart. And automatically what I see, unless this green candle busts through this shit, you've got a high and the lower high, right? That's telling you that, hey, and it's a lower high off of structure. Not only that, price action of the candles, we'll get deep into price action. This candle engulfed this candle. So we have the break of structure. The structure's right here, okay? Break of structure, 3 candle break of structure. This is minor structure, not major, guys, okay? Break of structure, retest to it. Second candle didn't break it. Unless this third candle closes and another 1, 2, 3 candle start pattern happens, like I said, this is going to have to break above this moving average, close above there, start your 3 candle break of structure again, and you go long until it hits up here. But if you fib from low to high, we're at the 382. Anytime the market rejects at the 382, guys, it typically has a nice strong, hold on, let me mute somebody, a nice strong move out of it, okay? And we'll get into the different characteristics of the retracements and things like that as well, because the deeper the retracement, the slower that move is out of it. Since this is a shallow retracement, and honestly, it could be a nice shallow retracement, guys, and I'll show you what I'm talking about. And you guys might be able to follow along and see it. Wave 1 is the extended wave. Wave 2, and we can just do it like that. Fuck it. But like I said, this is Elliott Wave. Wave 1 would be extended wave, and as you notice, each time it pulled back, you know, it's just a small retracement or correction before an ABC correction that may be looking to reject at some structure at a 382 fib level that should be going short. All this, guys, is in alignment with our higher time frames of going short, right? We're just taking a deeper peek every time we do our multi-chart analysis. Not only that, we do a time frame analysis. So we saw the momentum, what might have changed and shifted off of the daily chart. We looked at the 4-hour and saw the actual structures that we needed to find to see, you know, hey, what needs to break? Where does it need to bounce at? Where could it potentially reach, and things of the sort. Now we're on the 30-minute, looking at the price action of the candles, looking for an engulfing candle or a Maribozu. These are 2 candles that I specifically train you guys to look for as far as taking trades. And that first candle was just engulfing right here, the retest. Now we're looking for rejection in the same zone. So if I wanted to even go deeper, right? If I want to go deeper, I just keep going deeper, guys, you know? And now that I'm teaching you guys what all this squiggly stuff is, you can still kind of follow along even though you're looking at a different time frame, right? Look at this right here. I can still zoom in. Here's a high. Didn't break it. Didn't break it. These are lower highs than this high. And if this engulfs, even on the 15-minute chart, like, yo, you might want to be looking to go short. And this is the things that I'm teaching you guys. So a lot of the times when I'm entering these trades, it's usually around, I would say 10:30 to midnight or so, and then I go to sleep. But it's pretty crazy to see how this stuff is really playing out right now. And one of the rules of Elliott Wave is on the major retracement, it cannot break the high or low of wave 4. So in this instance, since this is a downtrend, in order for this to be validated as a continuing full retracement down or not a change in momentum or trend direction, it can't close above this right here. Now, here's what it can do. It could come up here with a nice push up and then immediately slowing back down. That's perfectly okay. That's called a stop hunt. Some brokers do that. Or a lot of brokers do that. I'm not gonna say some. But as we can currently see how price is reacting to that structure level based on off the 302, 382, and so forth. So if I was to remove this indicator right here, guys, that would be considered naked trading with price action. And that's what I'm teaching you guys with just a couple of training wheels. You guys got any questions?
Nah, but I'm gonna have to watch this again though.
Oh, no doubt, bro. I mean, like I said, this is just a quick
Yeah, likewise.
or
It's being recorded.
yeah, it's definitely being recorded. And like each of these concepts, like we go deep into Elliott Wave. Before we get into Elliott Wave though, I teach you guys like how these candles form, why they form, and how they react and why they react to certain things. I show you specifically what type of candle pattern to look for. I show you specific candles to look for. I show you what these wicks and no wicks on the candles and stuff like that mean. So like this is why I tell you guys, like if you guys just stick to this right here, like this blueprint, if you add some indicators, understand that you're still going to be trading price action with the system using that indicator. The indicator is there to add confluence. That's what it's there for. It's a lagging thing. And what we're learning, we're going off price. So you'll see the move before the indicator even reacts, which is pretty dope.
Is there always an ABC after the 5 point move in the Elliott Wave?
So ABC, this ABC is a generic or basic retracement. You can have A, B, C, D, E, F. You can have A, B, C, D, E, F, G. And those create, like once you get into like the A, B, C, D, E's and things like that, those are what create like your pennants, your flags, and things like that. And we'll cover all that too.
Never heard of a pennant or a flag yet. That's a new term.
Oh, really?
Yep.
Dope, bro. So let me see if I can point something out for you then real quick. It's just, so a pennant and a flag are just major market structures. So if you picture this pole, from this low to this high, if I was to draw two parallel lines, oh man, get off of there. If I was to go like that, and then go like that, this would be more of a flag type of retracement. And each of these points would be like, it would be like A, B, C, D, E, right? Instead of A, B, C. It just gets deeper into it. And then when you have, let me see, a pennant or a triangle, you see how this kind of like just forms to a point?
Yeah.
I mean, this is a shitty example, but I'm just trying to, make sure you get the picture. Basically, that would be considered a pennant. You got your pole, and then the retracement is what forms that pennant, right? On the flag, you've got your pole or your impulse or your trends, and then the retracement is what forms the flag. So there's just different charting patterns that happen over and over and over. For instance, like this double bottom, you've got your head and shoulders, you've got a teacup, you've got a lightning bolt, all kinds of stuff, just different stuff that I want to teach you guys. This is from this whole thing right here with this handle, that's considered a teacup. Like it's crazy the stuff that we're gonna dive into once we get going, guys. But
Almost
tonight I
like
just
astrology. It's like looking at the stars and you look like, oh, that's Ursa Major. I see no damn
straight
bear.
up,
Where the bear
hey,
at? I don't see
straight
it.
up, bro. That's kind of what it's like, man. It's like breaking the matrix code. But man, once we get deep into this stuff, guys, like I'm training your all's eyes to look for the same stuff. We're on these charts, we're on these markups. I'm having people mark it up so that way I can see for myself, what you guys are doing and critique you. But like I said, like it may seem like overwhelming information tonight, but understand, guys, it's really not that hard. The main thing is controlling your emotions. Learning this part right here, easy. It's easy. It's just keeping your psyche intact and just trusting yourself. That's the toughest part of training. I kid you not. All right, but let's see here. Any other questions? What y'all got? What y'all got up for me?
I got nothing.
No, I think we don't really have much questions because a lot of this stuff we kind of went over with Caesar and Brian already.
Cool.
So it's kind of like a refresher.
Oh, dope. That's dope then. Because
For me,
I plan
I
on.
came in.
Go ahead.
Sorry, I came
Go
in
ahead.
late, so I missed all like the beginning classes and all that. So like this is
Yeah.
good for me. This is a good
Oh,
top
dope.
up. Like so I never heard a lot of this stuff. It's really kind of cementing what Caesar's been saying. So I haven't really. I like I'm catching on to it, but I don't really.
Yeah.
I'm kind of like missing a couple links, and you're kind of piecing it back together, like back
dope.
testing on it for me. I don't know how you want to call it, but it's helping me out a lot. I appreciate it.
Oh man, I'm gonna show you guys a different way to back test within Trading View and all kinds of stuff, bro. Like it's crazy.
All right, now we're talking.
Man, like so yeah, we're gonna get deep into these concepts, guys. Like I said, like this isn't nothing I really made up. This is just information taken from different books and it just meshed together properly. So and I'll give you access to all the books. You all can read them yourself. Like it's like I can't hide anything from you guys or anything like that, Like, and this is the full sauce. People don't believe that I'm actually giving away the full sauce. I'm just like, damn, bro. Like, yo, I'm giving away the full sauce. Like, it's nothing.
Yes, sir. I don't know. I guess, Paul, I could ask you. I know Daniel's relatively new. Paul has some experience. How would you say the way he was going through things and everything, as far as it matches up what we kind of already do? It's a different aspect to it and a different strategy, especially like the breaking of structure, the 3 candles, like that. That had me. I was like, okay, I see the nuggets. I mean, this is the man I learned from 6 years ago. This is the reason why I'm here before you today. Is this man right here? You know what I mean? What would you say, Paul? As far as what we do already, would you say this goes along with what we do?
Yeah, honestly, just watching it so far, it's like what we've done so far, it lined up exactly with pretty much what we went over today, like almost to a T. But then he threw in like little extra pieces that kind of blended everything together. So it's like getting like different perspectives from both of y'all. It kind of makes it click.
Yeah.
Once it starts clicking, it's like, oh, okay, I know exactly what that looks like. I know what Harmonic Star looks like. I know the Elliott Wave. I was like, all right, it makes sense.
Exactly, and like you said, what we teach is not new. It's just we're taking. There's so many different concepts and so many different strategies that are used in Forex, and people will use like literally one thing, or they'll trade off of just an EMA, or they'll only trade head and shoulder patterns or whatever. And then you have other people who learn all this knowledge, and they get confused by it, and they do this time, they do this time, and this time. What we're doing is we're bringing together things that have confluence with each other. So that way you're not going to confuse yourself. You're not going to be like, oh, well, is it this or is it that? And then you're unsure. It's using the confluence of multiple strategies and multiple variations of knowledge that has been known for almost 100 years, if not more, just put in together in a course and simplified.
Exactly.
Wallace, I don't know if you want to make an announcement. I told them that we would have an announcement for them.
Oh, yes. So, this course, guys, is actually what I'm going to be teaching you guys. Like I said, I'm actually partnering up with you guys. Like, Ward 3 and the exchange is like together. So you guys are going to get access to me. And like I said, so this course is going to be, it's pretty cool, man. I like it. Like I said, it's going to mesh everything together. You'll probably discover a lot of aha moments, like how I'm going to put it together with you guys. So it's just pretty dope, man. Just give us some time, but yeah, man, we're gonna get y'all to the next level.
Man,
Yes,
that's
sir.
fucked up, man. Y'all doing this shit without me here in my house. That's some fucked up shit.
Yeah, he literally walked out right as I like started speaking. And
throw your X's up.
Another thing that I want to say is part of this collaboration. So those that are in exchange, you guys know that we have been working on the website, the app, and all that. So everything is going to be integrated together. Everything that we've been working on is still in place. We're not changing anything. We're not jumping ship. We're not doing any of that dumb shit. Our focus is trading and teaching the psychology behind it, teaching the risk, which is those two things right there. You can learn from us the risk and the psychology, and you can go to YouTube in any strategy, and you can become a millionaire over time. What we're going to do is we're going to fast track that by giving you strategy and higher confirmations. And like I said before, if you can get to 70% win-loss ratio with our risk to reward, with the psychology, it's a matter of time before you become a millionaire. But you have to stick to it, man. And me and Wallace will tell you, man, like you said, leverage is a double-edged sword. We've racked up, I'd say my best trade was about 650% in a couple hours. 500 to 2,700 I think would probably be my high. No, I traded news. I turned 100 into like 900 something. So that would probably be my quickest flip in a short amount of time. Like in a matter of a minute, I turned 100 into 900. But guess what happened after that? Because I didn't scale back in. I didn't go back to a risk to reward. I didn't have a trading plan. I lost all that.
Hello?
Muted himself. Muted himself.
Yeah, I don't know how the hell that happened. I think I hit the keyboard. But yeah, just as quickly as you can win it, you can lose it. So the biggest difference between a profitable trader and a retail trader is what happens after they have a big win. So let's say a retail trader wins on a $1,000 account, they double it, right? So their $1,000 account, they win $1,000, they're at 2,000, right? Same thing with a good trader. Say they did the same thing, 1,000, and they took it to 2,000, right? Same scenario. The retail trader on his next loss is going to lose, if not as much as he just made, he's going to lose more. So then he's either going to blow his account or he's going to be below his original balance of $1,000. He'll be at like 800, 700, 600, whatever. The good trader, after doubling his account, has a risk in order. And let's just say he had a 10% risk. So, which is kind of high. But on $2,000, that means he would have lost only 200. He's still up. He's at 1,800. So just to give you like some, a brief synopsis on what we're teaching you guys, that's really in the power. And Wallace, he definitely went into some advanced shit. So when he says he's giving away sauce, he's giving away sauce because we have not even gone into the advanced course with exchange because we're still in Facebook, and I don't want to be held to the limitations of Facebook. And also, there's a lot of people that are not engaging that we're giving a free opportunity to, just like Wallace is. If you're not going to take advantage of this, when we launch the website, you're going to be excluded. You're not going to get access to the full course. You're not going to get access to the advanced. So I understand life happens. You got a job, but show up. If you're hungry, like Paul is hungry. I see him taking notes. I see him not missing webinars. And when he missed it, he was on vacation with his wife celebrating his anniversary. He was, I'm sorry, guys. You know what I mean? Like, that shows the desire to actually learn this. And this is a very life-changing industry, man. This is literally the world's money. So when you look for a job or you go to school, you always talk about, or they always talk about the industry. Travel industry is 4-point-something trillion or this, that, you know. Forex is the world's money. There's no bigger industry, guys. So the only thing that I can ask you is to treat it serious. Wallace knows what the fuck he's talking about. He's the one who trained me 6 years ago. He's the one who turned me into the beast I am today and what I know. And he knows things that I don't. Like, I learned some on this call. Even though I'm very well knowledgeable, and I learned from him. And there's some things that I'll bring to the table that, you know, maybe he doesn't have in his course. So by putting our minds together, you're like you said, you're hearing it from two different perspectives. But also you're going to have things to add additional confluence on top of, you know, what he's doing, on top of what I'm doing. You know what I mean? So, I mean, I don't know how else I could say it, but there's an immense value. You guys are here for free. This shit costs thousands of dollars. Like he said, he's joined courses. He's had mentors. We spent a lot of money getting this knowledge. We spent a lot of time. We spent, you know,
that's the main thing. A lot of time.
That's what I was about to say. Time is more valuable than money, because you can get money back. I can make money. I can lose money, but I'm never gonna get my time back. You know what I mean? Like the 2 seconds I just said that, I'm not getting that back ever.
And all you new guys on here too, another thing is that you want to consider, a lot of times when things are free, people don't take it serious. So and that's an emotion. And this is good training. This is good training for getting into Forex. Remove that emotion of what you're getting is free. Remove some people charge $1,500. Just realize that what you're getting is a skill set that's pretty much, I mean, it's priceless, because it's a skill set that can literally, so they were talking about 70%. You can literally, with risk reward we teach, and what Wallace, what all of us teach, the 70% is on the good side. That's on the good side. On the bad side, you can do 30% and still be a full-time trader, just making 30%. You might not be a millionaire, but you can definitely not have a job and trade making 30%. So on the bad side, you can be a 30% successful trader and still make a living and not have to work. So definitely take this shit serious. Just because it's got the price tag of free on it, don't think that it's some garbage value or anything like that to you new guys. It's definitely some sauce, and becoming a institutional trader versus a retail trader is huge, and that's pretty much what we're kind of teaching you.
That's
exactly
what we're teaching you. And if you have any experience at all, you know what the fuck we're talking about. So you already know. You're probably just like, okay, this shit's about to get lit. If you're new, just trust your gut, because I'm pretty sure you're like, oh yeah, this is exciting. But don't let that slide down. Don't let life get in the way, because life is just going to keep coming every day, man. And one thing that I can tell you, because I know Wallace took time off and I took time off, one of our good friends right now, Ryan DeFreitas, who is also a founding member of the exchange, is absolutely killing it right now. He is master trader level, man. And me, Wallace, Brian, we're all fucking super proud of him.
2K to 24K in 24 hours.
Yeah, well, yeah, I think it was less than 24, but yeah, he's beasting, man. And I mean, we already knew we had the potential on this, but we just didn't have the correct mind frame. We didn't have, like I said, the risk to reward, the trading plan. It was a new game, and when you can click a button like Wallace says and make a shit ton of money, it throws some weird emotions your way, man. I've never been a gambler. I never played the lotto or nothing, but I years ago when I was doing Forex, that's essentially what it came out to. It was like, I'm trying to pay all my bills on this one trade, and we're stripping that away from you from get-go, that you need to have your risk to reward in place, and you need to make sure you're minimizing your risk, man. The more you expose yourself to this market, the easier you're going to lose money, and the quicker you're going to go back to that 9 to 5 and slaving away. You know, I mean, we as human beings, in my opinion, are not made to go to work for 40 years of our life for 40 hours a week. And
40% of your pension.
Exactly. So I mean, I definitely appreciate it, Wallace. I don't know if you were done or not, but I had to hop on here real quick because I got this. You know me. I'm back. You know, you see my post, bro. I'm back. There's no hiding. Fucking
hungry.
The burning desire in me it's insane, bro. It's insane. So yeah, we're gonna put shit together for y'all. Whoever comes along with the ride, you know, it's gonna be fun, man.
Gonna get awfully litty.
Oh, for sure. Fuck, I thought
Straight up. But no, I don't really have much else for you guys tonight, man. That's really it. So the course, guys, I'll probably do it from now until probably around December. I'll probably do the full course a handful of times, 2 to 3 times probably. So, I mean, like, if there's something that you didn't get the first round, you know, hey, sign back up for the second round. Something you didn't get from the second round, sign back up for the third round. Because after that, like, I'm doing it so that way I can give people ample opportunity. Like I said, I'm giving away for free, right? But I can't give away for free forever.
No.
So,
How long does it take you to go through the course one time?
one time, I'm going to say it was 10 days. I'm going to say in between I'm going to say 2 weeks. So a total of 14 days, like 14 days, not like 14 days consecutively, but a total of 14 days. So we'll have like 14 sessions of learning.
Yeah, this is all live, guys.
Right.
What times you gonna be doing them? What times you be doing them? You set up a time or something?
Yeah. Well, I'll tell you the days that I plan on doing it right now, because right now I'll take online classes for blockchain development. I plan on doing it Sundays around 8 p.m. I plan on doing it Tuesdays around 8 p.m., Thursdays around 8 p.m., and then we may be able to throw in a Friday and Saturday if you guys want to. But for right now, it's those 3 days.
That worked for me.
Yeah, that works.
Worked for me. I don't know about anybody else. Perfect.
So, like,
Friday, I'll be drunk.
Hey, exactly. You know what I'm saying? Like,
Friday, I'll be drinking.
We're gonna get you guys together. Like, so I'll probably post like a syllabus and stuff like that, like what I plan on teaching on each day and so forth like that. So that way you guys can be prepared, like an actual course. You know what I'm saying?
So when are you starting? This next week, next Sunday starting?
I would say probably next Sunday. At the max, 2 weeks.
So C's, what I got to do with your back testing on Sunday? Yes, you gonna stop doing that then?
No, we can just switch it.
Okay.
Yeah, we can do market analysis at like 7 or something.
Yeah, remember so what we normally do for anyone else, like from W3A and stuff, on Sunday, normally what we do, we get together for an hour, and we go over multiple pairs, starting with the DXY. That's primarily, right. I use the DXY, which is the index to find the correlation of the USD pairs. So essentially, I create a map for the USD on Sunday, and we see how it follows along. If it follows along, great, perfect. We already in there. We're making money. We're following it. If it doesn't, then we know typically what it's going to do the opposite of our map. So we kind of wait. We wait for a move to happen. We wait for a retracement, which is structure hold, like he was explaining, and then we go along with the trend. So, you know, we're essentially, it's like I said, we're creating a map on Sunday for certain pairs. We'll make a markup and say, okay, well, I think if this level holds, or, you know, whatever the case is. So we could always switch up the time on that. That's perfectly fine. Or I don't trade Mondays, so I don't mind doing it on Monday. You know what I mean? I could always switch it to Monday. So me and Wallace literally just talked. Me, Wallace, and Brian just talked yesterday about collaboration. So it's still in its infancy and stuff. So, you know, we still got to put our heads together and talk and figure out time schedules and all that stuff. So,
gotta coordinate.
Straight up.
So give us some time to
God rest his soul.
Get everything together and get everything aligned. But you know, we're super chill. We like to have fun. We like to joke, but we also take shit serious as well. So, you know, I look forward to meeting y'all. Wallace, if you can, please post your social media in the comments for my students. So
yeah.
And then
Wallace is Corey.
Yeah.
All right.
And then I'll put mine on there if anyone from W3A wants to follow myself or Brian.
the exchange one?
No,
let's
like
see.
our personal one. I think
We'll follow Brian, man.
Yeah. So, guys, if you guys really want to get ahead on some of this stuff, Ward 3 Associates on YouTube. It has an older course and uses the PDF that I use on you guys tonight, actually. Free drippy drop.
War 3.
Yeah, Ward 3 Associates on YouTube.
Yeah, he put it on the chat. Facebook search.
Yeah, it's in the chat if you open up the chat. Daniel. Search black and white. What?
I was gonna say black and white photo because I don't have my link.
Yeah, what chat?
Oh, just you got a fro, motherfucker.
Or actually,
Ward 3.
Yeah.
It doesn't look right. Black and white.
War 3.
Search black and white.
No, I was gonna put search Caesar Jackson black and white picture. I'm just gonna go to your Facebook and look at mine.
Just copy it.
Yeah. My bad. I'm on Brian's prehistoric machine.
3 gig of
Oh, yeah,
RAM,
yeah.
son.
He's acting brand new already.
Right? The motherfucker trying to throw me under the bus with my 3 gig of RAM.
What you mean?
Been brand new, boy.
What you mean? You saw the setup. You saw
Man, yo, Brian, your keyboard don't light up, bro.
That's why you're talking.
Oh man.
Vex, man, yo.
That is too funny. Hey, so but hold on, before y'all go, I want you guys to see what is really happening on this EU real quick, cause like it's bouncing down. Well, you guys can take a look. You guys seen it? Like what the fuck?
It looks like it's dropping.
Yeah, basically, you know what I'm saying? So I will say this, with it being on a Sunday, I'd expect one more full push up.
Like on what time frame? Like on a 4 hour maybe?
1 hour or 30 minutes, I would expect another push up. In between, yeah, I would still expect a push up in between now and the London Open.
Like for it to
Yo,
come
my
to
bad.
like 18.
My bad.
Right.
Because
like I said,
out on his main
I
computer.
like to have the deeper retracements, but right now at that purple 4 hour structure, that's at the 382, and typically off the 382, it's a nice strong push away from it. So, but I'm just not seeing that strong push just yet. But again, it could just because it's Sunday and it's
What
also,
chart are you talking about?
Euro USD.
Hey, have you seen on the 4 hour there's a higher low? You know what I'm talking about?
Yeah, on the 4 hour. So you got that
So it's
single doji candle.
yeah.
Yeah, I mean you can technically say that's a higher low. And that's why I would expect. That's one reason why I would expect one more push up to give us that deep retracement I'm looking for to that shadow box I had highlighted. Because right now where it's actually at the bottom of that structure. And let me share my screen real quick so that way you guys follow along real quick. Let's see. All right, so this wick, right, on this purple line, that's actually delineating structure from over here. So it's not really breaking above the structure, but I still feel it has the potential to push up. Just a nice little time before ultimately falling back down. So, but yeah, you're right.
You think it's all the way up there?
That's where I expect it to, but whether or not it gets up there, it depends on this current candle and what happens after this current candle.
Okay. Because on the fifth, that would be like a 76.4.
Yeah, exactly. So, like I said, it just depends. But if this drops heavy, then hey, we already know.
Indeed.
You know what I'm saying? So, and look, shit, I ain't even lie, man. I want to enter that shit right now. But it's Sunday. It's like it's weird for me to trade on a Sunday just because there's no major players in the market for me to really like piggyback off of. So what we trade off of is just simply like a lot of emotional retail traders.
Yep. People who just can't stop pressing buttons.
Basically.
Well, the reaction is different on a FXCM. Because on Owanda, it looks weird compared to what it looks like on even like MetaTrader and FXCM.
And you will get that broker to broker. So that's pretty common in the industry because not everybody has the same liquidity providers. So you have to understand that on every transaction that you enter in, so for instance, on this short, there is actually somebody who is buying that, right?
Mm-hmm.
So their chart probably looks a little bit different from what you're looking at, depending on who they get their liquidity from.
Yes, sir. The Nuggets.
Yes, indeed.
Hey, you definitely dropped some advanced shit. I've been waiting to drop the advanced shit because I don't want my shit getting stolen. You know, people on Facebook. I don't trust Facebook, and I definitely don't trust, you know, me putting my hard fucking effort into that.
I'm just like, man, let me just drop the whole thing, give people a chance.
No, that's why we started working. On that stuff, so we have control over that shit.
No doubt, straight up. But yeah, man, that's all I got for you guys tonight. Hopefully you all, you know, either learned something, got set up, or excited about the journey we're going to take together, and, you know, let's make this shit happen, man.
If they ain't learned something, then they better than they better than us, because I learned something from that I don't use them in my team. So
I ain't learned shit.
That's because he's dicking around.
I heard every word you said. Wallace. I turned the volume up so loud on my computer that I could hear you on the other side of my house.
Damn.
Seriously. I had to make sure that if you were